Happening.
That's it.
We're live.
All
right. Hello, everyone. Welcome to our Q&A webinar. I'll just give you all a few minutes to connect.
Hi, Peter.
Hi, Peter. We can see Peter chiming in there. Please, everyone, chime in and let us know if you can hear us loud and clear, and feel free to tell us where you're calling from. And while you're all doing that, we'll take a couple minutes just to let everyone connect, and we'll get underway shortly.
Go grab a drink, get settled, finish off your dinner, whatever you may be doing. But yeah, give us a chat, make sure that we can that you hear us so we can see where you are. And like I say, we'll be live in a moment. Peter, great to see you live again. Looking forward to having some of your questions come through. We do have a lot of questions today, so we will try and cover off as much as we can. And Armin's going to give a full run through of everything we touch on tonight. And yeah, like I say, hopefully we'll get through as much as we can. It'll be a bit quick fire. But like I say, it should give you the answers to all those pressing questions, particularly after all the exciting developments that we just released.
Cool. All right, should we kick into it? So my name's Armin. I'm the head of product here at Kernel. And for those of you who have attended our previous webinars, you would have been graced by the lovely Kat Emerson. She's actually tomorrow away on maternity leave. So show her some love in the comments, because she is actually the one who is responding to all of your comments in YouTube today. I will try my best to fill Kat's boots, but I'm ably supported by someone you all know, Dean, our CEO here at Kernel. So tonight we'll be doing a quick Q&A, quick fire around, answering all your questions. And I just want to thank everyone for sending questions in over the last 2 weeks. We've had literally hundreds and hundreds of questions come through, and we will get to as many as we can. We can't get to all of them, so what we're going to do is get the CS team at our end, or the customer support team, to respond to all of those questions in the coming weeks. Equally, if you've forgotten to submit a question, or you have something that pops up tonight, feel free to drop it into the comments below, and we will get Kat to respond to it. Or alternatively, Dean and I will try and get to some of them at the end of our session tonight. The topics we're going to cover tonight are our new funds. So we've released a couple new funds, our new products, KiwiSaver and Save, and also our fee changes alongside some of our product development that's going on for the rest of the year, and much more. I need to do a bit of housekeeping, so we'll aim for 45 minutes tonight. I have no doubt we'll go over that. If you do run short for time, we will post this session on YouTube shortly after, so you can chime back in and watch it whenever it suits you. If you do have questions that pop up as we go, feel free to submit them in YouTube. We'll do our best to get to them. Equally, if we don't explain something as clearly as you'd hope it to be explained, let us know. We'll come back to it, or Kat will dig a little deeper into it, and we'll answer those for you. Finally, this is not personalized financial advice. It's general investment information. For more information related to the Kernel KiwiSaver Plan and our funds, please check out our product disclosure statements on the Kernel website. All right, so let's kick into it.
Try to scroll through all the questions already, and the loads coming in.
That's good.
Let's go.
Cool. So we've recently made a swag of changes across our product suite, our fund offering, and also, interestingly, for a lot of our customers, our fees and pricing structures. A lot of platforms out there don't charge a member fee, and so I thought we could kick it off by talking about Kernel's recent change to our pricing structure. First, taking our member fee from $3 to $5. Other investment platforms that don't have a platform fee, why do we have one, Dean, and why have we increased it?
Yeah, so there are a range of ways that people can charge for different services within the financial services sector. And some of them are really transparent, some of them are hidden, some of them are obvious fees that you'll see, like a platform fee. Others you may see written down somewhere, but they actually may not be that obvious to you as to how much is coming out, such as fees on a fund. For us, our customer base, what we're really focused on is helping Kiwis build and manage long-term wealth, not just for today, but for intergenerational. And we want to be really transparent and aligned to that. So that means we don't want to care about whether you're investing $1, $1 million, whether you're investing every week or one-off. What we want to do is deliver a service that's really efficient and supporting and maximizing your long-term financial objectives. We all know that fees eat into returns. And from that point of view, what we want to do is ensure that the fees that really make the biggest impact and compound over time, such as fund management fees, the fees that you pay on your KiwiSaver or the fees that you pay in your investment funds. We wanted to make those as low as possible. So by doing that, what we want to have is a fixed fee, the platform fee. That means that that's covering the costs that come with investing, the financial services costs that generally come about, and all the compliance that goes with it, but lowering the things that eat away into your returns over time. So really excitingly, from our point of view, what we've done is lowered the fees that you pay on your funds. So now the core funds are down to just 0.25%, some of the lowest in the market. By doing that, that's going to save you more over time. So over time, as you invest more, as the markets go up, that means that you will keep more of the returns that come from your investment. Fund management fees, they're not that obvious. They're not like a $5 platform fee where you see it coming out. But if you think about if you had a fee of 1% that was coming out every single year from every dollar that you had invested and from every dollar that you were made over your investments over life, that really compounds. So for us, we want to be really aligned in supporting long-term wealth. So no transaction fees, no foreign exchange fees, and lowest possible fees that we can deliver on the investment offerings so that investors will keep more of their returns. So
awesome. So, I mean, we've got a lot of customers on the call who are probably have burning questions about this and have had burning questions over the last week. Of our customers, who is this better for?
Look, we want to obviously always support every single customer that we have and deliver better solutions every single time. There are about 10 to 11% of our customers that fall in a little band that's about between 25 to say 50 grand, who they have a slight fee increase on the current investment offering that they may have. And for context, that fee increase is about 25 cents a month up to about $1 per month. But what we're trying to deliver as well is a lot more features throughout the platform. So Save, KiwiSaver, and a lot more that's in the works. But the key there, though, is that small band of customers that have had a higher fee. We've told everybody exactly what's going on. And what we're excited about is as they contribute more and as their balance grows over time with the markets going up, they will actually start to save more. So for the vast majority of our customers, 91% day one saving plus more compounding savings over time. And that's sort of what we're pretty excited about.
Awesome. So I imagine a lot of customers are saying, Kernel, you're a young business. How are you able to lower these fees? Where does the cost cutting come from?
Look, as everybody knows, and as Armin, particularly in our tech team, and trying to drive all the things that we're doing and all the big ideas that we keep chucking at you, we are digital. So we have the benefit that we are actually starting today. So we didn't start with all of the legacy and industry and the baggage that comes with a lot of the traditional financial services who are running on old processes. We were able to really be streamlined and deliver a digital first business. That means we can be far more efficient. So we're trying to deliver a pricing structure, a service structure that's 100% delivered to you online when you need it and really efficient. So for us, being able to pass that through, particularly given we're 2 years old and seeing already how much we've improved the fees over time and the sort of direction that we're going, I think it's exciting. It's exciting to have so many customers really supporting us on that journey.
Awesome. And so for perhaps some of those customers who aren't customers yet, how does this stack up against other platforms that are in the market?
Again, I guess it's a real differentiation thing for us. There are a range of ways that you can go about investing, and there are a range of different services out there. Some of them are more about trading or transactional. For us, we're supporting Kiwis building and managing long-term wealth. And so we wanted to strip out the sort of transactional based fees. We don't want to be in, I don't care whether you want to invest $1 today or every single day or once off and that's it. We're aligned and want to grow and succeed with your long-term success. So that's how we've structured it. We've removed all those sort of transactional fees. And for us, that really makes it a platform centered around long-term, intergenerational, securing sort of financial futures. So awesome. There are different flavors out there for everybody. That's what we're about. That's what we're going to back and continue to deliver on. And you have the big task of trying to keep delivering all these big ideas that keep coming from our customers and from our team into market with the best experience possible.
Totally. Fees aren't the only things that we've changed. We've obviously added 2 brand new funds to bring our full suite of funds to 13. So we've just recently added the Kernel High Growth Fund and also the S&P 500. Kernel has been referenced by many customers about the Global 100, how it provides global diversification. So why would we add the S&P 500 and what can that add for customers?
Yeah, so anybody who's been with us from day one has seen that we've continued to sort of grow with our customer demand, and we're trying to continue to deliver a range of solutions to suit everybody's flavor, whether that's ESG investing, whether it's global, domestic. We're building you the best of breed products. And part of that most recent addition, we know that there are a lot of investors who love the idea of investing in sort of US centric. The S&P 500 is really well known as sort of a global benchmark. So for us, it was about delivering that really efficiently. It is different to the Global 100, the original Global 100 that we have. That is, and as the name implies, it's about global diversification. It's not just US. So if you want to be getting some exposure or being invested into Europe and Asia, the Global 100 is the place to be, whereas S&P 500 is giving you sort of the best benchmark for the US markets.
Awesome. So we had a lot of questions over the last couple of weeks about the S&P 500 being hedged. Some saying, what is hedged? And others saying, why is it hedged? So can we ask, why have we decided to hedge the S&P 500?
So we've got 2 funds that are hedged at the moment, and we may extend that. We may have some more of our funds that are hedged. What is hedging? As you know, if you invest into offshore markets and you're buying a share in a company overseas, not only do you have the movements of the share price going up and down, but you will be impacted by the currency. So if you can change $1 of New Zealand, $1 New Zealand dollar today for 70 cents in the US, tomorrow you may be able to get 75 cents or 65 cents. So those currency changes impact your portfolio in New Zealand, and depending on when you're buying or selling. What hedging does is basically removes that currency fluctuation. So then all you're getting is the general investment up and down movement. So we want to deliver the hedged 500. We think a lot of people report and measure on that in the US dollar sense, or look at benchmarks online. If you kind of want a bit of exposure to the US anyway, you've got that with the Global 100 as an option that's unhedged. So for us, it was about creating flexibility and choice. And we'll look to have versions of different products over time as well.
Totally. And so would you say choice is the main reason why I'd pick the 100 over the 500, or is there anything else we can add to that?
It's flavor. And so what we're trying to build out here is not a supermarket. We don't think that you need to have 10,000 different investment options. We can build you the best possible index solutions that give you flexibility to customize what you want. To your point earlier, obviously we launched a high growth. What's the purpose of the high growth? It's a great building block. What we've done there is designed a fully diversified, it's got global, it's got infrastructure, it's got REITs. It's a well-diversified fund that would actually suit most investors in terms of that are looking for that long-term growth. And then you can either start with that, add to it, or however you want to go about it. So
yeah, nice.
Again, flexibility.
I guess there's a lot of growth funds in the market that are being touted. How does our growth fund differentiate to other growth funds?
So for us, as our existing investors will know, all the funds that we offer are pure equities. So just investing into listed companies. So this is, I guess, in the industry, you can kind of classify, they're actually bands. So people may be more familiar with these terms when they look at KiwiSaver, where you'll typically see with your KiwiSaver, often at a bank, you'll see sort of conservative, balanced, and growth. And each of those basically has a different percentage invested into what they classify as growth, which is shares, versus sort of bonds or cash. Conservative, obviously heavy into cash, term deposits, bonds. You get up the growth spectrum, more invested into companies and shares. Growth over time and shares over the longer term outperform cash and bonds, obviously. So for us, what we wanted to do with the range that we had was to build a high growth. It's also known in another language that you may see within KiwiSaver as aggressive. So if you go a good site, if you want to go and do some comparisons, just FYI, we won't be in there yet because it takes a few months. But sorted, you can actually go into sorted and see different fund categories, what that breaks them down. So if you think about an aggressive or a high growth fund, it's typically 100% invested into shares. That's what we've built. It's a fully diversified high growth fund. There aren't actually that many high growth funds out there. There's a lot of growth, but what investors will find is that those growth funds will typically have 20, 25% of that into cash, into government bonds or corporate bonds. That's good for smoothing the ups and downs a bit, but over the longer term, particularly if you've got time on your side, and particularly when interest rates are rising, that 20-25% can actually be a bit of a drag and slow you down. So we knew that there were a lot of customers out there that were saying, we want high growth, we're investing for 10 or 20 years, we want to maximize our long-term sort of financial objectives and want it to be 100%. So that's why we've sort of started with the high growth fund.
That's awesome. That's awesome. And so that fund takes our fund range to 13 funds, which is awesome. And that then leads nicely into why we've decided to call a high growth fund and something that's quite synonymous with the KiwiSaver industry, which is obviously high growth, balanced, conservative naming of funds and whatnot. So we've obviously done a lot of work over the last 6 months to bring a KiwiSaver product to market, and that's currently sitting in beta. So please jump on the website and sign up if you're interested in the Kernel KiwiSaver Plan. But Dean, can you tell us who is the Kernel KiwiSaver Plan designed for?
Well, probably a lot of the investors and us on the team, like myself. Obviously, everything we offer today is high growth or pure equities. Now, as everybody knows, when investing in shares, there's ups and downs. So well-diversified funds that, like we offer at Kernel, typically we'll always talk about 5 to 7 years. Those are the time frames that you need to be sort of considering or have available when it comes to investing. And so therefore, particularly with the KiwiSaver offering and the funds that we're offering today, not probably the best starting point if you're trying to buy a house in 2 years' time.
Sure.
But if you've bought your home, you've got 5, 10, 15, 20 years on your side, you're obviously contributing through KiwiSaver all the time, then that's a great starting point and something to consider. Then it comes down to that flavor thing. Do you want to be 100% equities? But yeah, what we typically talk about is things like investing in shares is that sort of 7 to 10 year plus period. So if you've got that sort of time frame, I think with KiwiSaver, it's really interesting as well, though. There are a lot of people who in the KiwiSaver space or may have a KiwiSaver fund think that at retirement in 65, I'm going to take it all out and put it in cash. Remember, actually, we've talked about this before on some of our webinars, about a third of us live into the 90s now. So that's potentially 30 years in retirement that you're trying to fund. And so your KiwiSaver that you may have built up over 10, 20 years, when you get to 65, it's not like you take that out on the first day, put it into cash, and then you start spending it all. Some of that actually could still be invested for 20 years before you really need to start touching it. So I think sometimes the biggest risk for a lot of people has been they are planning, or they go too conservative too quickly, or they put it all in cash and then they try and live off that. And interest rates are rising, but when interest rates have been really low, you haven't been able to live off the interest.
Yeah, cool. Great. So, I mean, how does the plan work? I think I can answer a bit of this. Obviously, had a big part in the last 6 months helping us build our tech product for Kernel KiwiSaver. For those of you on the call, you wouldn't have seen it yet because it's sitting in restricted access, but we surveyed a lot of customers and they want flexibility and control in the KiwiSaver plan. And so we will take our 13 funds and we will offer them to all of our customers so that they can customize their portfolio as and how they please. That'll give them extra control and flexibility to help them achieve their investment objectives, because we don't believe it's a one-size-fits-all investment approach. You should be able to take control of that investment strategy. And so that's what we've done. It'll be the ability for you to choose out of our 13 funds and apply allocations as to what you want to invest in.
Live soon.
Live soon, yes. So we plug, please go sign up to the website. Those of you who are on the beta list, and if you do sign up to that form, you will get access probably ahead of the rest of the public. So go sign up if you're interested. Please, we'd love to share it with you early and ahead of time. Another question there saying who can use it? Kids accounts, joint accounts, trust accounts. I will say that kids accounts are available to anyone at Kernel. So if we don't allow a kids account to be signed up via our technical workflows or our digital workflows, if you do want to set up a kids account on behalf of your child, you can call our customer support team and they will set one up manually for you. So just because the website doesn't accept it, please call and reach out to the team. They'll be able to set up kids accounts for KiwiSaver and also for invest products. As for joint accounts, you can sign up for an individual account and get access to these products. But at the moment, there is a limitation where the members cannot get access to that KiwiSaver plan. This is all work in progress. We do have a lot of requests coming in for multi-account setups, and we will be working on this extensively over the next 6 months towards the end of the year. So,
Make it really easy. So you can have one login.
One login, all accounts. That'll be fair.
We actually have, it's surprising, we have quite a range of customers that you'll know, like quite a lot of trust customers, joint accounts, people joining from all sorts of,
That's right.
life stages. So it's exciting.
We have a broad range. So regardless of your circumstances, reach out to us via phone. We're always here to take your inquiries and figure out how we can help you. So how does the Kernel KiwiSaver plan compare to others? Is there anything else you'd add there in terms of differentiation?
Look, the main thing for us is continuing to try and build something that's really aligned to customers' long-term focus and interest, giving flexibility, control, but with a great set of products that we know are time-tested and proven. We're a data-driven company. That's why we believe in indexing investing. So these are the things we stand for. We're going to continue to innovate around that. Welcome more feedback on it. We're pretty excited about the KiwiSaver staff and the experience that the investors will have through the dashboard. And it's a real interesting one. I think, from your point of view as a designer and us internally, we don't actually want you logging in all the time and checking and playing around with things. So it's ideally you will get it set up and it's a set and forget thing, but you have the ability to set it up to the way that suits you and what you're about. I guess on that, touching briefly on the sort of range of funds, obviously everything we do have is high growth equities. We know there are a lot of people that are planning for their first home or are getting closer to retirement. We will have more choice soon on that stuff that we're working on, along with multi-accounts. There is a long list of exciting things that we want to get to. So do definitely sign up to our beta, our mailing list, reach out to the team because we love your feedback. It really does prioritize what we're doing. It makes everybody in the team really excited when we do get that feedback coming in. So keep reaching out on it.
Yeah, cool.
I'm going to jump in and see one question that's come through here as well that's relevant. I know we'll do it at the end. Does it switch out of KiwiSaver 65? No, it doesn't. Today now it can stay on KiwiSaver as well. So yeah.
Cool. One other thing in terms of how we differentiate from perhaps our invest offering is that Kernel KiwiSaver has no member fees. So that is 0 member fees in terms of monthly platform fee. It is just the fund management fee that we'll be taking for your investment in Kernel KiwiSaver Plan, making us one of the most cost-effective providers out there. So definitely consider it. We'll move on. We have been doing a bunch of stuff. We've obviously now talked about the new funds. We've talked about KiwiSaver. We've talked about the fee change. We've also been busy at building additional products outside of our fund offering. So we've added KiwiSaver, but we've also added a cash product being our Save product. And so we started with a Notice Saver account. Dean, can you tell us a bit more? What is Save and why have we added Save?
And I guess touching onto your point, as you can see, pretty proud of the team and what Armin's been driving here and everybody that's been involved in this, because as customers, as followers, you will have seen, we have done a lot in the first 3 or 4 months of this year. So it's been a very busy start. Save is one of those new features. And so what we've started with in this category is a thing called a Notice Saver account. Notice Saver accounts are really interesting. It's like a bank account, but you have to give some notice before you can withdraw the money. And so that's sort of a 32 days notice before you can get your savings out of that bank account. The benefit of having the notice is that you will typically get a higher interest rate than just a general transactional or on-call bank account. So not instantaneous flexibility, but what it does do is it gives you greater, higher interest rates, which again, it's all about maximizing every cent that you can.
Totally, and timely given the OCR has just been raised by 50 basis points. It takes our Notice Saver account to 1.9%.
I think that's a really interesting one. I think not everybody understands that Notice Saver, we've been in a period, right, where interest rates have been falling for effectively 40 plus years. And so typically what we're used to seeing is, my savings account or the term deposit rates are going lower and lower and lower. Now we're actually in this environment where interest rates and the OCR is starting to go back up. So as interest rates rise, on one hand, that does mean that mortgage costs and borrowing costs are going up. Hopefully, you get the good banking partners, the interest rate on your savings will also go up. What that does mean for some people is one of the benefits, I guess, of a Notice Saver account structure is it's because it's like a bank account and it is a big bank account, is that as interest rates go up and the banks pass through those interest rates, the savings rate goes up. So when we actually announced the Kernel Save product, it was 1.4, it's now 1.9%. That's different, and I guess just to highlight one of the benefits of that structure in a rising interest rate environment, if you were to lock into a term deposit, right, you may be going, we need to try and get a 2% term deposit rate, and you may be locked in for 2 years. Well, if during that period the interest rates start rising, you're not going to get any more on your term deposit. So one of the nice features about a Notice Saver type account is that interest rates will rise, then you should see that start to come through over time, and you'll benefit that automatically.
Awesome. So I imagine a lot of our customers are saying, how often is their interest paid?
So interest is calculated obviously on that daily basis and calculated and processed through and paid into the account on a monthly basis. So
that's one. Yep. Cool. And so how does tax work with Kernel? Are you taxed at a PIR rate, or is it at your RWT rate?
So our very early investors were probably curious. We've always had plenty of big plans as to where we were going and what we wanted to do. And so from day one, we actually made sure that we were also capturing, when you sign up for an account with Kernel, not just your PIR rate, which is what we use when it comes to your investing in our funds, but we also ask for your RWT rate. That's basically your personal day-to-day tax rate that you'll be incurring on your income. Our funds and KiwiSaver is under the pie structure, which basically caps the tax at the 28% rate. Whereas with a savings account, it's based on your personal resident withholding tax rate. So, your 10.5%, 17.5%, up to 39% now. So it's taxed at that. But I guess from our point of view, all of our existing investors, we made sure we captured that tax rate from the very beginning, because we've always had some pretty big plans about what we would start to offer in the future. And so now the first of those has gone live with Save.
Nice. And so I'll do a little competitor plug as well. There's a lot of customers who have been sending us questions saying 1.9 is a stupid rate. That's double what some of the other big institutions can offer me. How does Kernel offer the rate of 1.9?
Yeah, so really key here, it's not Kernel that's offering it. The money is sitting directly with RBNZ registered banks. So this is the bank in New Zealand. So we're opening up bank accounts directly with the customers as they come through, and it's sitting at a bank earning interest rates from the bank. So there are a range of different banks out there that are all available that can provide these sort of things. What we've done is integrate that with a banking partner into the platform. So it makes it really easy for you to go about having short-term savings goals or having an emergency fund, because often what you'll find within the banking sector, your bank may not be the best place for savings. They may do really good day-to-day functions, they may have really good mortgage rates, but they may not have the best savings accounts or other features. And by shopping around, you can find better interest rates. What we've done is remove that hassle for you. You don't need to go and open an account with another bank just to have your savings. What you can do is you've got your Kernel account already, you can have and set up for short-term goals or your house deposit, or just generally to have some more conservative savings and investings. Get a better interest rate, have it in one place, and all the tax, everything else is taken care of, and you don't need to go through all those registration processes. And again, the nice thing about coming back to sort of good behavior and the things we want to see, having an emergency savings account, those sort of things, they're actually ideal not to be in your day-to-day bank account, because it's very tempting every now and then when things, you go out or you go away on holiday to dip into some of those savings when really they should be sitting aside for other purposes. So it removes some of that temptation as well.
Yeah, totally. And so, I mean, that kind of wraps up the addition of the new products that we have. We've obviously got Save now, KiwiSaver, and we also have our Invest product. And it really does change the overall value proposition that we offer to our customers to be now a multi-product offering and an all-inclusive personal finance platform. So that's a big shift for a lot of our customers who have historically been interested in primarily our index funds.
Yeah.
And that's incredibly exciting for us as a business and ultimately for you as a customer, because that's who we're doing this for.
Jeff, look, for us, this is the start of Save, as with all the things we want to do on the platform. As we talked about with having more diversified funds and different risk profiles in the fund space, we've also got a lot of plans for what we're going to do with our Save offerings. So Jeff's asked, are there any plans for an on-call account? Look, definitely we understand that there'll be those needs where you may want sort of those instantaneous access. So there's plenty that's going to happen within that sort of bucket as well.
And so, Jeff, I can confirm I've chatted to numerous customers over the past month who have been testing our beta feature for Save, and there's been a lot of feedback saying the same thing. They want an on-call account to couple with that Notice Saver. Many have said they'd use both products alongside each other. And so we're actually already advertising on the marketing side that on-call is coming.
Yep.
And there is a beta sign-up box down the bottom or a restricted access box. So if you go and sign up there, you'll be the first to know when on-call is available.
Yeah.
But what this means is that we then have 3 products where we can start to offer cross-product insights in our platform. The platform will change drastically in the next wee while, and so you will see 3 products that you can choose from rather than just a swag of index funds, which is really, really cool for Kernel. And so, I mean, in terms of what's in store for the rest of the year, for us, it's been an incredibly hectic 6 months, getting the new fund offering, this pricing model change, the KiwiSaver plan alongside the Save product, and then a platform and website that can cater for all of these different, I guess, verticals.
Supported by, and a shout out to Armin and the team here, a growing team that has, this time 12 months ago, there was sort of 8, 10 of us, teams grown, really supporting all the things we want to do. So there's a shout out to everybody. It's a fantastic, the support from the customers and the feedback as well that's fed into that. So.
Yeah, for sure. Just on Kernel Save, I see Kevin Hardy's there. There will be T's and C's that link off to more information about Kernel Save. Also, if you go to our help center, there is a bunch of stuff on Kernel Save, so give it a Google.
Sorry, not a Google, give it a click. And you can see a question as well. You're not restricted to, you can put in as often as you like. It's not once a month deposit per save. You can have, set up a regular savings into your savings bucket as well.
Totally. But to go back to the past 6 months, obviously we've delivered on a lot. From here, it's really about getting those 2 products out of restricted access or beta and into everyone's hot little hands. That'll be happening in the next couple of weeks. So if you are interested in getting early access and you've made up your mind based on what we have on the marketing site, please sign up and we will get you early access. It's a wee plug, but it's coming very shortly. We're going through the final rounds of testing. As you'll appreciate with KiwiSaver, it takes about 10 days to do a transfer, and so we need to make sure that all the flows behind the scenes are working appropriately, but we're very close now. So go sign up. We're a matter of weeks away, not months, and we'll be able to get you that. In terms of other things that we have coming up, I've already talked about multi-account. That's definitely something that has been requested by many customers. And so we will put an emphasis and focus on looking at how we can get joint accounts to have multi-product, how we can also enable trust and kids accounts to have digital sign-up. We also have a request from somebody asking if there's an app on the horizon. No, we don't have an app on the horizon at the moment because I don't think we have a burning need for it. Dean spoke to something earlier about good behaviors. And I guess having an app would allow you to look at your balance day in, day out, which is perhaps not a great behavior for long-term investing finance. So no app right now. And then we have another question about more tools and calculators. Are these coming? Absolutely. Tools and calculators are something that we really want to double down on. We have on the marketing site cut these for the time being because we are working on making them bigger and better and offering a more extensive suite of tools to help you make better investment decisions about where and what product you would like to invest in. So there will be a whole bunch of focus on that over the next 6 months. Alongside a bunch more resources from the team. We obviously had the fifth tax calculator. So for those of you who are interested in tax, all that stuff will be coming back and more to help you, make great investment decisions. Final question there is a way to transfer asset. Well, I don't actually know. So that's a good one. Someone's asked, is there a way to transfer assets easily from other providers to Kernel? And that's something that we do get asked about.
Probably touch on a few different things here. How does some of these different things work, right? And how does the platform work? So when you create an account, you get your access, and then from that account point, you can then open and use whichever product you like, be it the savings feature, the KiwiSaver investments. For investments, you set up and you transfer into your Kernel wallet. From that wallet, you can make and choose the investments that you like. With KiwiSaver, obviously, what you're doing is moving from, I'm assuming 99% of people in here already have a KiwiSaver, unless you're opening maybe a kids account. What you would do is once you've opened your Kernel account, then you actually request the transfer. As Armin said, those transfer times, unfortunately in the market, they still take about 10 business days to transfer from your other provider, but that's all taken care of behind the scenes. Same with Save, you deposit into the wallet. What we'll continue to work on is ways that we can help automate and really streamline the way that your money comes into and is managed throughout the platform experience to give more flexibility, more automation, so that you can have everything set up. To Armin's point, ideally you come in, you set up what you want, and then you go away and enjoy everything else that you do day to day. Hopefully less work and more time with family on the weekend. And those are the things that we want to try and support there. So we will see ways to transfer. You can't transfer other assets. We have had that come through as well around, can I transfer another fund? No, not at this stage.
Yeah, cool. In terms of future development, we believe that the customer has been at the heart of everything that we have done. Ultimately, that requires your voice to feed back into the product, and we are all about customers helping us shape what the future of Kernel looks like. So if you do have suggestions about future product features, anything and everything is welcomed. Please send us a message through the various channels. We have a phone number, support at Kernel Wealth is available to you, and I'll take personal emails, everything, send them through. We want to hear everything and anything, and I love chatting to all of you customers.
Should we go through some final questions? We've got some time. Armin has done a great job at powering through our Q&A and trying to keep me on point. So some other questions that we had come through that are more broad in nature. So with respect to global turmoil, what's your view? Do you have suggestions when it comes to funds investment? And a question we had pop up there, I have lost 10% of my investments. How can I feel confident? As you all know, we are a data-driven business here. We take a long-term view, and reality is when you're investing in shares and you're looking to maximize long-term wealth, then time is your friend. We can't pick what happens tomorrow, good or bad. All we know is that over time, that actually being invested in the market, not reacting to short-term noise, those are the things that will do you well. People who chopped out of a growth KiwiSaver into conservative KiwiSaver at the height of the pandemic had a really poor outcome because they reacted to the short term. You've got to stay focused and understand what you're trying to build to. Particularly relevant if you are regularly contributing as well. So there is always and forever, there have always been different events. There's always things that seem to distract and create attention. You look back through history, we've had GFCs, we've had dot-com bubbles, we've had all of these major events, but you step back and take a bigger term view there. Being invested in and investing and taking a long-term approach has paid off more than anything. Shares have outperformed other asset classes like property and cash and bonds, etc. So you've got to take that longer-term approach, and that's exactly what we're about. This is why our fee structure the way it is as well. We want to be able to support regular investing. We want to have that long-term approach. So I guess one great comfort with that is if you ignore the headlines and don't worry about checking in on day in, day out, and you're well diversified again, which is one of the benefits of trying to use an index fund. It's about ensuring you're diversified. You're not just betting on one company. You can switch off from those headlines and take comfort and go and enjoy the day-to-day and think about the long term.
Awesome. I see Dylan Cartwright there has asked, will there be more comprehensive analytics and graphs on the dashboard? Absolutely. We love data as much as you guys do. I guess that comes with the caveat that data is complex, and to show the right data back to our customers, we need to put a lot of effort into it. So as a business that has its own tech platform after 1 year now, we have done our best in that time frame to get everything that we have to you. We absolutely will put more emphasis on showing you more data, more graphs, and more analytics so that you can make better decisions about your investments.
A really boring one, I'm going to check it in before we get squeezed for time. Tax. Most of you will be sitting there going, right, why are we talking about tax at 7:30 on a Thursday night? We love it. It really actually does matter. It's like a hidden fee. If you don't get tax right, it eats into your returns and compounds over time. You won't notice it. You don't get a nice statement or an email saying, oh, you've paid X in terms of that's what's eating behind. All of the funds we've tried to design them to maximize the tax efficiency for end New Zealand investors. And that's the key, is tax is different in every market. You've got to be investing into a structure that's designed for your home market. And so that's what we did from day one. We've written quite a lot. So for those that really care and want to dive into the complexities of it, on our website, there is a calculator and there's a whole paper that we wrote with another industry partner that had input from a range of tax experts talking about the best and most optimal tax structuring. So if you're curious about it, we obviously can't give specific tax advice for you, but we can give you the guidance and the tools to try and help you understand rather than having to go and read 90 pages of IRD documentation. So hopefully you'll find that of interest and we can guide you in the right direction.
Awesome.
An interesting one, which I am also really passionate about, given that we really back the indexing methodology here, is, are index products overvalued and creating a bubble, and are they therefore due for a big correction? Would this apply to the S&P 100? No. So index investing has been around for quite a while now. Indices themselves have been around since the 1800s. The first index fund, as many of you may be familiar with, was started by Jack Bogle from Vanguard in the 1970s. So, we've got decades of history around index funds now. In the US, actually more money goes into index funds now than active funds, and they're about 35% of the market. Now, New Zealand, we're a little bit behind here, as we typically tend to be in terms of catching up with some of the options that are available offshore. The market here is probably only about 5% of the market is held by our index funds. That's what we're trying to change, obviously give you better access and more solutions. The key thing to think about here is, I think sometimes there is a lot of news around this whole active passive. We've written some great blogs on it, so definitely check out the website. We can direct you in the right place to dive into this more deeply. And we've had a few webinars on it, so do check through some of the other YouTube videos, and always happy to hold another one if you've got more questions. Basically, what indexing has done, it has lowered fees and given better outcomes for customers. So over the longer term, all the research shows that sort of 9 out of 10 actively managed funds will typically underperform what you could have just got from a substantially lower fee by investing in the market. So investors have been shifting to index funds because they're backing the data, they've seen the decades of research, and going, actually trying to pick stocks and trying to outperform the market is really, really hard. May have a good year, but then to do that consistently, and when you're trying to invest for 10 or 20 years, that's really hard. So index funds have become increasingly popular. Now, some people then go, and active managers tend to like to create a bit of debate in the industry. Why? Things like, well, in the last 20 odd years in the US, it's estimated that $500 billion has been saved in fees. So $500 billion has been saved in fees that would have gone to active fund managers, that because those investors are now in index funds and paying a lot lower fees, that money's not going into the hands of active fund managers. It's instead staying in the pockets of the investors. When you take that much revenue out of a sector, and these people that were used to big bonuses, a very, as many people would assume, lavish sort of sector, it tends to create controversy. A good example though is, does owning a large part of the market with index funds create a bubble? No, it's not actually about the proportion of ownership. It's all to do with the amount of trading volume and what's going on. So there really isn't any evidence at all to kind of point towards that. We've done some great blogs on it. I'm happy to answer any questions on it and do a deep dive session. As you probably pick up, Armin's heard it a million times from me. We love talking about this. We love trying to share the insights and answering questions around this. So do keep pinging them through. And again, happy to have a separate session on this at some point.
Totally. There's one more there. Something we didn't talk about earlier is what other new funds do we have on the way? And so I wanted to talk about first the infrastructure fund, which is one of our most popular funds. And it can be regarded as an inflation hedge. I'll give you a question, Dean. For argument's sake, would I sell down from another equity fund and put it into inflation? Put it into the infrastructure fund if I wanted to hedge inflation.
I think more broadly, the bigger picture there is, don't be trying to change to pick the market, right? It's like with anything. It's like trying to change from a conservative to a growth fund. It's not always good to try and react. I would come back to, though, it is probably not a bad idea to be diversified, and hence why we started. We've launched the High Growth Fund, which is diversified across, the broad global equities, infrastructure, REITs, etc. So you get that in one fund. The key with diversification and a good long-term investing plan is that you're not just in one sector. You don't just want to be investing in one sector and one country only. You want to ensure that you've got some investment across different companies, across technology, across infrastructure, across healthcare. So as long as you've got some of that, infrastructure does typically have some sort of inflation protection, because a lot of the revenues that are tied into those sectors have links and contracts that means that their revenue will go up as sort of interest rates and inflation increases. So I don't necessarily think you need to chop and change funds, but you want to ensure that you've got a diverse mix that gives you some exposure. Again, will ensure that you've got lots of tools to be able to support that decision making.
Good one. And so Dylan's timely said, would you consider offering a total market index in the future?
From day one for us, it's always still been about efficiencies, tax, all those sort of leakages. We really want to make sure that you're getting the best possible net outcome. As much as most people won't care about that, we know that over time that'll make them mean the most to our investors. As you've seen, we have continued to launch more funds as we see that there's a right need and we can do it really efficiently and we can solve for different solutions. Obviously, we've got a lot of people asking at the moment for sort of more conservative and balanced solutions. So those are some of the things that are in the works. And then we really welcome feedback on other options that you'd like to see. And as we continue to grow, the support from our investors means that we can do more things and deliver more solutions.
Absolutely. And Abdul, I believe Kat has whacked my email address in here. So please send me all of your ideas and feedback if there's things that you guys want to see. More than happy to field those things personally.
Any other final questions? So I guess we've actually done an amazing job at powering through, I think, most and touched on most of the key questions that people had. But I will give a 5-minute little shout out if anybody has any final questions that they really want us to cover off. Bundles, we did have a bundles feature. Obviously now we've got a high growth fund. So that's available now. So that is, I wouldn't say it's a direct equivalent, but it gives a similar sort of concept there with one fund. You have a diversified mix of underlying investments. What else have we got here? Does KiwiSaver automatically transfer out of the fund when you turn 65? No, we answered that one. You can leave it in the KiwiSaver account. Obviously, we also have the same range of funds outside of KiwiSaver, so you can have it in either. You've got full flexibility. The Invest in KiwiSaver investment options are identical, so you're not defined as to which one you want to be in. You have full control over that. Any other questions?
My man, not sorry. Please send it through Abdul. I would appreciate all feedback.
Can we export data into CSV?
Yeah, actually, so we do have an investor report. Yes, CSV exports and being able to export it into Power BI tools or similar. We do have the ability to export reports from our report section. I will add that it is limited in terms of information. You don't get anything more than you have on platform, but yes, you can export those CSVs and then manipulate the data as and how you please. So please go to town on that. If you have requests for additional data, let me know what you want to see, and we can work on feeding that into the product roadmap.
One from Kat, who's probably got a little text message on this, or considering the fact she's going on maternity leave, investing with kids. Am I better to look at this in KiwiSaver or Invest? That's a great question, and there are pros and cons of both, right? I guess the main overarching theme here is the sooner you start investing for your children, the better off, because actually a really small investment regularly from an early age compounds significantly over time. Those first few years, the $10 a week, for example, doesn't feel like it's doing much, but it will actually grow quite substantially over time. With an investment account, it gives flexibility. So it does mean that they can take that investment out for other needs. I guess the downside of that, though, is they may take it out and use it for things that you may not necessarily intended that for. With a KiwiSaver account, it does have some nice restrictions. You know that it's locked into your kid's name. If it's a family situation, you may not have somebody unintendedly accessing that somehow. It removes the risk of the kid taking it out at 18 and actually going and buying a brand new BMW. What it does do is it puts it away into an investment account that is tied to a first-time purchase, a hardship withdrawal, or their retirement. So there's key life stages. So some of that restriction is actually quite nice for a lot of people when it comes to investing, is you know that your kid's got time on their side, that they're only going to be able to access it for those key things. So you don't have that concern about they're going to access it at some stage and potentially use it for the things that you didn't spend all of those years saving for and investing for.
Bruce, on your dividends versus capital breakdown, this is something that's in motion. So I believe there is an effort on dividend amounts being paid out to be surfaced back into your individual fund overview. It might actually be there. I just need to double check that, but yeah, that's something we've been talking about recently. As for capital breakdown, I can't completely answer that, but yes, we would absolutely, we've talked about breaking down capital inflows a bit more for you in the dashboard. So that's something in progress.
Can we advise individuals on best fund? No, we don't provide advice. We're not financial advisors. We can connect you with advisors. So we've got a great range of known and independent financial advisors across the country, those that aren't tied to major firms, etc. So if you do ever feel like you need advice or you want somebody to give you a plan, do reach out, because our team can provide you a list of partners in the area that you can go and speak to. They may have nothing to do with Kernel, they may need a very recommended fund, but we know that's important that somebody will go and get a plan for the things that they need.
Jeff.
Yeah.
Jeff, I'll get to yours. Can distributions be automatically reinvested in all funds? Yes, so we do that at the account level. So when you sign up to Kernel, you'll decide either to reinvest your distributions or to have them paid out as cash. So that is done for all funds regardless. So you select that upon signing up to Kernel.
Great question from Bruce. How would Kernel outcompete in fees for nonprofit? We take a very long-term view on things. We've got a different business model generally, I guess. Obviously we've got a member fee for the platform, the way we structure things, and what we're investing into. That ties a little bit into Ewan's comment. So investing into public good, NZ Super Fund and others investing into living, build to rent, those sort of things. Those things, again, probably tied a little bit into Bruce. Those come with cost and complexity. I think what we have planned is some great initiatives around that social good space that we'll continue to explore and roll out. But it's actually about giving you more control on those factors. We don't want to be the ones that are making the decisions. We want to put that into your hands so that you can invest and support the causes that are relevant to you. So those are the things that we'll look to work on. Obviously, by lowering fees, that ensures that you've got the flexibility to take that extra investment and to put it to the causes that you care about. As a business, though, we take our corporate responsibility really seriously. So we obviously, for those that aren't familiar, as a digital business, we have a pretty low carbon footprint anyway, but we offset any carbon. We're a living wage employer. We support the prior community every year. So we try and do the things as a corporate citizens to really set the standards for what we want to see in the market as a general business.
I think we're getting pretty close to wrapping up all the questions there. Thank you to Money Hub for joining us today. Is there any others there?
Look, there's been some great questions. We had a lot on email. What we try to do was consolidate them as best we could into these key categories and themes that were pretty consistent. Hopefully we've answered them all. As Armin said at the beginning, if you want a more detailed answer to something, definitely feel free to reach out to our team. Everybody's got Armin's email as well now, so feel free to pick him an email as well.
That's right.
We're more than happy to hold more sessions like this. I think broadly, again, just a number of you that are watching and tuning in are existing investors. It's been great having your feedback and input on this. So do ensure that you keep following what's going on and pass through that feedback. We want to have the insights from you as to what do you want to see next, because as you can see, it's been a really busy 6 months. The next 6 months are just as busy, and now we're trying to prioritize all of the things that we have on the cards for us and to deliver you the outcomes that you're after. So keep firing it through, keep in touch with us. Thanks, Armin, for everything that you guys have done and helping coordinate tonight, and the team at home, and Kat for sitting on chat there. Obviously, I'm sure everybody is going to miss having you on screen for a bit, but Kat will be back at some point soon. So, yeah.
No, thank you guys, and I look forward to doing this again with everyone very soon.
Have a good night.
Bye.
Bye.